trades. It's going to be an important week, and apart from big earnings, we also have the IIP numbers that's due on the 10th of November. Not just that, on the 6th we have the listing of Reliance Nippon Life Asset Management. Remember, the issue price for that one is 252 rupees apiece. Khadem India IPO, that's going to close as well on the 6th of November. And then watch out, it's going to be time for HDFC Standard Life IPO to open between the 7th and the 9th, with the IPO price band at about 275 to 290 rupees. And on the macro front, yet again, we'll have the CPI data that's due by the end of the week. But lots of big earnings expected. Let's get in Poonam, who joins in with a snapshot of some of the key nifty earnings and what to expect. Poonam.
Well, in fact, yes, watch out for Cipla as well as Oro Pharma. First, GST restocking, in fact, would be leading to good amount of growth coming from India business. Having said that, the US business is also likely to be least impacted on account of the pricing pressure there. For Aurobindo Pharma, this would be the first quarter wherein the EBITDA, in fact, would be crossing over 1,000 crore, growing nearly around 23% quarter on quarter. The profits would be aided by huge amount of by the profitability of the generic Renvela drug, and that in fact would be aiding good amount of profits there. For SBI, they have reported from first Q onwards, in fact they're reporting consolidated numbers. Stress assets would still remain fairly high, may see some amount of stability or some moderation on quarter basis. Profit on a quarter basis would also improve on the fact that good amount of gains would be coming out of stake sale in SBI Life. L&T, watch out for the order book there. The order book would be aided by large orders as well as broad order base finalization. Not just that, the revenue growth would also be aided by the infra segment. In terms of Tata Motors, margins may expand, led by JLR margins. Expect the consolidated growth to be somewhere around 6 to 8%. For M&M, lastly, margins may be slightly under pressure on account of higher RM costs as well as on account of lower share of tractors. But having said that, watch out for the volume growth. In fact, the revenue growth would be largely aided by good volumes there.
Thanks very much, Poonam, for summing all of that up. And Girish, are there any specific stocks or sectors that you would look at that you have a bullish stance on?
Yeah, so we have a fairly bullish stance on consumer electricals. So these are stocks like Whirlpool, Crompton Consumer Electrical. So the story there is largely revolving around under-penetration. So for instance, Whirlpool, which you're fairly bullish on, the refrigerator segment and the washing machine segment. Washing machine penetration levels are somewhere in the region of 10% of households. Refrigerator penetration is somewhere in the region of 20% of households. So low penetration, the fact that the disposable incomes are going up, there's more urbanization happening, there's more electrification happening, in the sense that the number of areas, geographies or villages that are getting electrified is going up year after year. All that is a structural story which will lead to a volume growth in the mid-teens, is what my analyst believes, in the next 5 to 7 year time frame. Whirlpool has also been expanding its product portfolio, it's been expanding its distribution. So we think that the sales growth there will be in the region of 18% over the next 3 year time frame. We think that earnings can expand between 25 to 30% in the same time frame. Yes, the stock is a little expensive, but for a company which is going to give you a 25% plus earnings growth with ROIC greater than 100%, I think giving a 30 PE multiple, in my opinion, is a fair number to give. So we think that earnings growth is going to drive the stock upwards. So that is an area we kind of are bullish on. Pharma is the other area which we have a contrarian bet on. We think that the current compliance problems that Indian pharma companies are facing vis-a-vis US FDA are probably transitory and will, over a period of time, and we're talking about over the next 12 to 24 months, will get sorted out. And we think the pricing pressure also is something that is right now a key sore point, because I think the Indian companies are addressing molecules where there's a huge amount of competition. There is a very large segment of the market where the competition is lower, which Indian companies will have to focus on. These are the complex generics, and slowly what we're hearing from the companies themselves are they're going to focus on these areas going forward. So we think that the earnings which have, the sector has seen both a PE multiple compression and an earnings compression. We see both of that actually reversing over the next 2 to 3 year time frame.
Okay, and Kunal, what's on your radar?
Avan, the first stock which I'm betting on or which I'm recommending is Jet Airways. I believe that the stock has broken out of good medium-term chart patterns and inverse trend and shoulder volumes. Price patterns have been very good for the stock. I would expect that the positional traders should watch out for levels of at least 680 plus. Stop loss to be kept at 580. And the second is from the pharma pack, and Aurobindo Pharma is what I'm recommending now. The stock had a very good run a few months back, and then has gone to a broader consolidation, but the weekly charts and especially the RSI has confirmed a breakout, and I would sense that the price should also follow suit. Hence I'm recommending Aurobindo Pharma. From a short-term view, recommending a target of 850, stop loss 750.
Okay, on that note, we'll wind it down right here on the show. Kunal as well as Girish, thank you so much for joining in and giving us your views and expert comments. And with that, it's a wrap on the show.